Good afternoon, everyone, and welcome to TBR's Software Business Quarterly Review webcast, delving into the recent results of TBR's Software Vendor Reports and the Software Business Benchmarke Report. I'm Allison Crawford, and I'm hosting today's webinar. Over the past several quarters, we've engaged with our readers through this quarterly webinar series to provide additional insight into the state of the software market. We've had great interactions with all of you, and we're excited to continue to connect with you as the TBR software practice grows. Before I pass this over to Stuart and Elizabeth, there are a few housekeeping items I need to cover. First, we're recording today's session and posting it to our YouTube site, TBRI channel. We encourage you to visit this channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts throughout the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Stuart and Elizabeth will address them at the end of the presentation. Or if you'd like a private client inquiry for more detailed discussion, please reach out directly to Stuart or Elizabeth at the end of the webinar to set up that discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides, as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. And I'll be sharing all of these social media links with you at the end of the presentation. So if you didn't catch it now, don't worry about that. Now let me introduce Stuart Williams and Elizabeth Hedstrom Henlin. Elizabeth is our lead analyst covering enterprise software and has been working closely with the vendors covered in the report to understand their business strategies and models. Stuart leads our software and cloud research team and has been influential in developing Source IT, a cutting-edge research program focusing on buyer behavior in verticals like retail, manufacturing, healthcare, energy, and utilities, among others. And with that, let me hand this over to Stuart.
Thank you very much, Allison, and thank you, everybody, for joining us today. In this quarterly review of our Software Vendor Benchmarke, we're going to do a couple of things. We're going to look back at the year that was, 2012, do a quick business review, and also look at the 4Q performance for all of the vendors that are in our benchmark, so we can see leading performance, lagging performance, and out of the aggregate as we go forward. Now, there are three themes that we're going to cover in today's webinar that really tie into the renewal of the software business in 2013. Vendors are really pursuing strategies in each of these three areas, and Elizabeth will provide greater detail in these as we get after the annual review section of this presentation. First strategy is revenue growth. We're in a renewed spending environment with greater economic strength in North America and greater stability in Europe. We see software companies having an opportunity for strong revenue growth in 2013. So sustaining and defending the install bases while spending to grow market share and top-of-mind presence in new markets and segments is a key strategy for many of the vendors in our benchmark. Go-to-market execution through realignment of corporate infrastructure and investments is a key strategy as well. Here we're looking at firms seeking to drive greater efficiency and certainly more effectiveness in converting their go-to-market investments for direct and indirect sales into revenue. Finally, business reinvention. As businesses begin to change the way they consume software, looking to create blends of software and services, we see our clients and their businesses beginning to be realigned around new value propositions and new portfolios to begin to align with high-interest customer trends such as BI and analytics, cloud, and mobility. So with that, let's take a look at the year that was. So second half, what this chart is it presents the aggregate revenue for all of the companies that we have covered in our Software Vendor Benchmarke for the past 5 years. What we have here is mapped out their total revenue on the vertical axis and the percentage, the average revenue growth rate for the total software business in the covered companies from year to year. And we certainly can see the change from average growth years that we see in 2008, 2010, and 2011, alternating with certainly with off years, with 2009 being certainly the year of the Great Recession, where we see actual decline in software spending of 3% in aggregate for all of the firms that are covered in our software benchmark. Then a recovery coming back in 2010 and driving into 2011. But as we all know, last year at the second half of the year, there was certainly strong declines across the board for a great many of our clients. The vendor benchmark performance actually dropped down to 4% in aggregate for growth. Now, we see that beginning to recover coming out of 2012, beginning to grow a little bit in the first quarter. We'll show you some data on the next slide that shows that fourth quarter actually grew at 6% on average. But the key that we see for 2013 is the back half of the year. As the recovery really stabilizes, we see investments begin to be deployed and the spending actually get rolled out. We see that hitting our software vendors in the second quarter, beginning now, and rolling certainly into the back half of the year. We're looking at for a strong finish for 2013, given the trends that we see in the marketplace right now. So let's take a look at fourth quarter for last year on the next slide. This chart really represents the aggregate revenue for all of the companies in our benchmark for the fourth quarter. Each bubble represents the size of their particular software revenue, and that is mapped against the growth rates for both annual revenue growth rate for the firm and then quarterly revenue growth rate for the firm. So the vertical axis is the annual growth rate, and the horizontal axis is the growth rate for that quarter. Now, what this enables us to show is when we take the average for all of the firms in the quarter, we can see how they're performing against the aggregate average. So the leader segment, which is in the upper right-hand corner, we see firms like Commvault, VMware, Dell Enterprise Software, Citrix, Red Hat, OpenText, really growing very strongly because they're growing at above the average rate for the quarter and above the average rate for the year. So these are leaders in terms of performance in our benchmark. On the opposite side, we have the laggards category. So firms like Software AG, CA, JDA, TOTUS, these firms are performing below both the annual and the quarterly averages. So they're lagging the rest of the vendors that we see in our benchmark. Now, the other axis, kind of from the upper left to the lower right, the upper left we see firms that did not perform as well in the quarter, but still outperform the annual performance. So this is firms like HP Software, CA a little bit on the line there. And then the improving category, we really only see Intuit and Salesforce there. They performed better in the fourth quarter, but still kind of below the average for the rest of their firms that were competing there. So what this tells us is that the cycle, the lead cycle, the firms that are driving and they're taking advantage of the key trends of the move to virtualization, cloud, security, are doing very well. Some of them are actually cyclical firms that take advantage of 4Q spending. Typically, it's the OpenText firm. But that the cycle here is we're beginning to see firms move a little bit. The fourth quarter was a little bit weak for some of the firms. We anticipate that these firms are going to take strong actions to return themselves back to the leaders quadrant, or certainly the improving quadrant in the first half of the year. So this is a very interesting tool, and we'll provide more of these views to our clients who join us on these webinars every quarter, and we'll be able to track this change over time, showing who changed what position from quarter to quarter. So with that, what I'd like to do is begin to move on to the examination of business in the quarter, and I'm going to invite Elizabeth to join me in taking a walk through each of the three business drivers that we see shaping business for the vendors in the software benchmark.
Thank you, Stuart. As Stuart mentioned, 2013 we really see as a year of forward momentum for a lot of vendors in this segment. Talking about three key areas, we call them paths to success, and it's really what areas are these vendors going to target with investment to drive growth in the coming year. Let's start with revenue growth. So when it comes to how to drive revenue growth in a macroeconomic climate that is still showing some signs of hesitance in terms of customer purchasing, it really comes down to how do you think about the long term, invest for the long term without really risking any core businesses that you have that you're involved in to date. So we see vendors really moving to value-add features, portfolio investments around high-interest trends, including, as noted on the slide, cloud, mobility, and business intelligence, as well as looking at industry-focused deployments, taking applications and really targeting them very tightly to vertical business processes and needs to defend install bases and grow share of wallet within existing customers. So again, we're taking a look at sort of at the year that was. This is a snapshot of vendors within our Software Vendor Benchmarke, covered vendors looking at license revenue growth year to year in fourth quarter on the horizontal axis, and corporate revenue growth year to year on the vertical axis. And it's a fascinating split. You'll notice that Dell software is showing some record growth, and we want to make a note that that is influencing the averages for the quarter. As you'll see, they are relatively high. When we look at Dell Enterprise Software, we have been covering that business as part of Quest, when it was part of Quest, but now with the year-to-year addition for Dell, we expect to see some relatively high inorganic growth numbers for that business during this calendar year, and that will level out as the year goes on. So we're looking at about a 5 percentage point loss in year-to-year growth rates compared to fourth quarter 2011. And vendors are really all over the map in terms of how they are trying to not only keep the ground that they have, but also drive some forward momentum. A lot of vendors, calling out some leaders, including Oracle and VMware, are really looking at how do you best reinvent how your customers perceive you. Oracle's cloud business is really starting to drive some notable momentum for Oracle. They've managed to really sustain a $1 billion run rate in this business, which is an accomplishment worth highlighting because it involves not only retaining multiple acquired customer bases, but sustaining multiple acquired run rates and building on them, particularly that of Taleo. And VMware is also really trying to reinvent itself for its third virtualization story, so from virtualization 1.0 now to virtualization 2.0, which was the cloud, and looking into 2013, 3.0 as the software-defined data center. But what they tend to do very well is tie their products directly to the story, so it's about vSphere as a foundation for the software-defined data center, and it's a story that plays very well to the existing install base. So looking ahead, we also wanted to highlight some of our covered vendors within our Software Business Quarterly Report portfolio. These are vendors that exist within the benchmark, but also we write dedicated reports about them for new attendees in today's webinar. And these are really a good cross-section, we think, of vendors, both leading vendors as well as lagging vendors that are taking a product-led approach to reinforcing and sustaining growth rates to drive revenue momentum in 2011. For BMC Software, this is a company that really struggled for most of 2012 in terms of sales efficiency and execution. And having righted that ship in mid-year, they've turned their focus to establishing core mainframe management strengths in new realms, including mobility, so access on your device, but also business service management, which are two themes that really are helping BMC to unify their portfolio and tell an integrated story that is driving some new momentum for them for the first time in a number of years. CA Technology, like BMC, has had a number of points of struggle across 2012 in terms of sales execution. Moreover, these are single product companies, single theme companies around mainframes and management that have really struggled to find their foundation. CA, I think, had some definite wind in its sails in mid-year as they aligned very tightly with VCE to create a CA-optimized vBlock. And that really led the way for the hiring of new CEO Michael Gregoire formerly of Taleo, so really helping CA take that next leap into the cloud and unify its product portfolio under an on and off-premise end-to-end story. So from two companies that really struggled in 2012 around execution and how they're using products to drive growth, to now look at two companies that have always been product-led and product-driven. Red Hat has always really been a technologist company, a strong technologist company, building on its long-standing ties with the open source community to really monetize product-led growth. And Red Hat has really targeted what investments it's made in personnel to expand its footprint and in new businesses that take incremental approaches off of core Linux and now middleware strengths into the cloud and into management and orchestration of heterogeneous environments. We expect this to continue in 2013. They've already committed to add another 600 bodies to their go-to-market team, but that's also going to definitely constrain their ability to invest. So we expect Red Hat's focus to really remain tied to ensuring that new personnel are ramped up on product-led value propositions as soon as possible, taking that customer evangelist, technology-led story into the market quickly to accelerate return on investment. And finally, looking at SaaS, I think it's worth noting that BI and analytics is a trend that we see in our research coming up more and more often in terms of customers' near-term purchasing plans. SaaS has been in this segment for more than 25 years, and they have a long-standing, very loyal install base that's really built from IT up on the strength of its product excellence. SaaS's ongoing focus on R&D, we see really positions them for accelerating revenue growth in multiple points of business intelligence adoption across the coming year, and we expect them to be a leader in multiple BI segments and as such drive double-digit growth by the end of calendar year 13. So from revenue growth, let's take a look at go-to-market efficiency. As you see on the graph in front of you, we're now taking a look at revenue growth versus operating margin for 4Q12. Again, this is from our benchmark, and you'll notice again Dell Software really leads the pack in terms of an ability to drive in terms of its inorganic growth on the year. We do also see Dell's focus on integration during the privatization process as really well-timed to ensure that the Quest assets remain active in the market, even as Dell really reinvents its software-led go-to-market proposition. And this is really a story about efficiency. It's about how do you take, for vendors maximizing their go-to-market run in 2013, it's about how do you use the personnel you have or the personnel that you're bringing in and make sure that they are returning your investment even more rapidly to ensure that you're getting maximum velocity in the sales channels, both direct and indirect. And leaders in margin growth, really, when you're looking at the horizontal axis, which is corporate operating margin, it's the usual suspects for leaders. It's Microsoft, it's Oracle, it's IBM, and SAP. And I think IBM and SAP and Oracle and Microsoft all noted their ability to really expedite acquisition integration as a vehicle for cost control in calendar year 2012. I think the up-and-comers that we're really looking at in the near term are companies like VMware and Citrix. We expect them to come across the median in the next few weeks and months. VMware is in the middle of a major restructuring. Likewise, Citrix has been really escalating its own acquisition price points to make sure that they can bring these companies in-house quickly when they're needed. So I think this is going to be a very interesting slice of the market to watch over the coming few quarters as vendors make strategic near-term investments around portfolio and around process and how they expedite seeing a return on those investments. So when we take a look at some of our case studies again from our covered vendor reports. These are 3 companies, 2 of which are struggling, 1 of which is leading. In the case of Symantec, it's really about how does Symantec, under its new CEO, Steve Bennett, take the next big step into the brave future? And it's really coming down to process. They have a lot of products, and they're really looking at how do we make it easier for our sales teams to go to market. So they're taking the personnel that are already in-house, already trained and already aware, and focusing them on new business growth, while looking at establishing a renewals team as a vehicle to shore up that new growth and also really expedite the time that they have to train these new bodies. So make sure that they're looking at people who are a year out in terms of the revenue horizon and really capitalizing on the time that they have. I think everyone on this call is probably well aware of HP's ongoing corporate reinvention across 2012. With respect to the HP software portfolio, this was a very timely move in our opinion. They were taking more than 60 products to market as of October of 2012, and they really looked in the fourth quarter at how do you bundle those products into 4 stories: cloud and IT management, enterprise security, big data analytics, and meaning-based computing. And as noted on the slide, those last 2 really hinge on the Vertica and Autonomy acquisitions. And it's really about it's a marketing message, but it's a marketing message that really makes it easier for direct sales to do the street fighting that they need to do to drive growth again for HP from the bottom up. And we expect this to drive some positive momentum for HP in the second half of this year. And finally, Oracle has spent a number of months, as Larry Ellison noted at last year's Oracle Open World, turning a battleship takes time. But they are a company that's always known the power of direct sales and has really spent the time under the leadership of Mark Hurd to really align their portfolios to their sales teams, to their product portfolios. So looking at an investment in product specializations for direct sales, as well as realigning territories to ensure that account leads have overlay support that they need, really positions Oracle Direct Sales to increase its near-term presence across accounts in the coming year. And we expect with Oracle's fiscal year looming in what is calendar year 2Q13, but fiscal 4Q13 from them, we expect to see a real jump in Oracle's performance in the 3 months from current date, as Oracle's fiscal year is slightly off from the calendar year. They have already released their 1Q earnings. So we're looking ahead now at what we expect for their 2Q performance with this projection, but we expect a real rocket ship of growth from them in the next 3 months. So from revenue growth and go-to-market execution to business reinvention, and of all of the 3 paths to success we're looking at today, this one is the one I find most interesting because it really boils down to the unveiling of a story we've been watching across the last year, which is how do you really look at evolving what you do to connect to high-interest trends without abandoning your core install base. And I think, we can look at companies like VMware and their move to the cloud and now their return to the data center as, just a case in point of a difficult challenge that is, because you want to make sure that you're never jeopardizing not only your core customer base, but the maintenance revenue stream that comes from them. As we look at Reinvention, this is not just a story of portfolio, but a story of regions, because when you're looking at your current products, at your current install base, and at these high interest trends, the adoption really still varies from region to region. The Americas remain a heavily mature market in a lot of these trends, including cloud. EMEA, I think, continues to be a very diverse story because of geographic constraints around data center co-location, and APAC remains a rocket ship of development. I think it's fascinating to watch trends that really were very linear in America and in Europe around first virtualization, then cloud computing, happening simultaneously in APAC. And the adoption and purchasing trends in APAC are really just exponential when you look at those same trajectories from a year ago, or from a few years ago, rather. So the next three graphs really look at the regional splits that we saw in our vendor benchmark in the fourth quarter. So as we go through these, if I don't say this on every graph, just know that on the horizontal axis we're looking at the regional revenue growth for the quarter, and on the vertical axis again remains corporate revenue growth. And you'll notice by the cloud-heavy vendors in the upper right quadrant of your screen that niche cloud computing adoption really remains a growth driver in the Americas. Salesforce.com remains at the top of the charts, NetSuite not that far behind them, VMware, Commvault, Citrix, and even Red Hat, on the backs of their look at management and orchestration of a heterogeneous cloud, really showing some definite momentum in the quarter. It's also worth noting that this is a quarter of positive. This is a quarter of positive growth. So the double-digit license revenue growth in the Americas really signals the fact that if you can position tightly enough to a business process need in this region, you're still going to find growth pockets. And it's a similar story in Europe. Again, the growth year to year, is showing some high points, but it's also worth noting that there are some points of relative slowdown. As you see, there's a cluster of vendors, right near the median, where the vendors with leading install bases in this region, it's obviously a lot easier to show double-digit growth on a smaller number. But it's worth noting that the leading vendors in this segment, including IBM, SAP, Oracle, and Microsoft, again, have really managed to defend their install bases and ensure ongoing revenue strength. And with the macroeconomic concerns that we've all seen in Europe, I think that's really worth noting. And then finally, looking at APAC, it's an interesting tipping point, I think, when I look at APAC growth. We saw a lot of vendor investment, particularly from folks like VMware and Salesforce and Citrix in late 2011, early 2012, around building out regional infrastructure in APAC. And now the spend is really shifting towards monetizing that infrastructure, by that I mean facilities, by adding delivery and support personnel in region to ensure that you're not entirely reliant on channel partners to see products delivered, deployed, and supported. So vendors that are really looking at material growth in this quarter, but also across the coming year, are going to be those vendors that keep their own brand front of mind with customers, as well as sustaining and protecting the channel opportunities that they've built to date. And finally, let's take a look at a few case studies. I think this is about changing how you look at your own business, especially around telling a news story. For Microsoft, I think everyone was waiting for a number of refreshes from Microsoft in 2012. They came, they were well received, and the development behind them shows that there is fire behind the smoke on these launches. Microsoft is looking at really making sure that their cloud solutions are ready for market, and we see them as such. And we see, as a result, Microsoft is well positioned to not only incent its direct sales, but its significant channel relationships to bring those products to market and drive growth in 2013, especially in APAC. For SAP, this is an interesting story because SAP is really looking at how do they take five pillars of business instead of one. So looking at not just enterprise applications, but looking at how do you also tell a cloud story and a mobile story, and how do you do that in such a way that you're not overly complicating your own go-to-market. And we see that the realignment that SAP made around consolidating regional sales reporting and keeping the direct and channel sales tied to their regional leads is really going to help SAP drive some new agility in its sales teams to better answer the needs of in-region customers on a product-by-product basis. For IBM software, we keep hearing this from customers in our interview research. This is a company that continues to deliver quality, and it's a company that continues to inspire trust. And IBM is really looking at how do you take the established nature of that brand and invest in new markets to show that that IBM is not just the IBM we all know. It is an innovative IBM and a forward-looking IBM. And so they're really looking at high-growth markets as strategic investment points. And they noted that more than 30 of its targeted growth countries, including a number in Eastern Europe, saw double-digit growth in 4Q12. And it's also worth noting that SAP highlighted the same Eastern European opportunity, and they're actually creating a new region that's focused on the Middle East and Eastern Europe to ensure that growth remains high growth in 2013. And finally, VMware, again, as we talked about earlier, is a company that's undergoing a bit of a transition. They're moving products around, they're moving executives around, but they're not resting on their laurels, and they've made a point of noting that they're going to invest in headcount in targeted APAC markets as well as Eastern European and Latin American markets to increase their international footprint. And, they've seen success in APAC. I think they're really looking at ensuring that growth remains double-digit and remains a primary driver of momentum going forward. So with that, I think Stuart and I will probably both have a take on this, but I'll take the first whack. Looking at outlook and projections for 2013. It's about short-term growth and long-term opportunities. How do you make sure that you've got the momentum that you need for Wall Street in the first half of this year while setting up for longer-term opportunities where we see the second half of the year as a key driver of net new purchasing within the customer base. And from where I sit, this is really about how do you balance cost controls and new customer acquisition. And so it's about balancing investment in portfolio, investment in markets, and investment in personnel while making sure that your direct sales team always has an eye on retaining the customers that you've acquired. Stuart, what do you think?
So I think the challenges for the vendors that we're tracking in this benchmark are in two dimensions. One is keeping the focus on leveraging their existing permission to play areas and where they can take their portfolio to drive profitable growth. That, of course, is challenged by the second area, which is the transformation inside the customer base with the way that they're consuming software and the way that change is happening kind of not at the same speed across the customer base. It's happening differently in different industries, and it's being driven by things like mobile devices, cloud, the need for increased levels of analytics, the renewal of customer spending inside different industries at different paces, and their ability to ramp up their investments. So the firms that we're working with and on the advisory side are all looking to begin to wisely spend their dollars against their IT agendas. And they're not getting huge dollars, but they're looking to shift the mix, and vendors that can tie their portfolio to these strategic areas of purchase are the ones that are going to be the most advantaged. So our advice to the vendor community right now is to not just look at your point product solutions, but to elevate those to the customer segment needs that are emerging. Now, a specific case in point here is the retail segment, where we have lots of conversations with end customer groups, both line of business and end users, who are really trying to drive their business to be reinvented through IT, meaning they see the transformation that the consumers have undergone through the purchase of smartphones and tablets, and they see the way that the customer's purchase has shifted. They need to react. The largest vendors and retailers in the space are trying to react and add in mobile point of sale, increased BI and analytics, improved supply chain, improve workforce management so that they can shift, put the appropriate number of people and assets in place in the bricks and mortar environment and still have a unified view of their supply chain and they're available to order, available to purchase, available to deliver inventory. So the message here is that there may be small areas outside of a vendor's bailiwick, like, say, mobile point of sale, but implementing those solutions have huge pull-through transformational effects on the way that the IT environment is designed, how responsive it needs to be. And we want our clients, our vendor clients, to recognize that and to look to these key drivers, these transformations that are happening industry by industry, and connect the value propositions to enable those transformations. The vendors that we see doing that are the ones that the end customers, again, are looking to purchase the most from. They're most likely to purchase from. So that will increase speed up the sales cycle. That reduces a lot of the extra value of conversations around the price competition. So you wind up driving greater value for the end customers and driving more profitable business from a vendor's point of view.
Great, thanks guys. I think with that, you guys are wrapped up, so we can open it up to questions. We've had a couple come through. I'd like to encourage anyone out there with any questions on the materials that were just presented to send them through now. Okay guys, the first question we have is, where will vendors move in terms of new product launches? What are the trends?
So where will vendors move in terms of new product launches? Well,
I think big data still remains top of the list for a lot of people.
Yeah, so if we think about the applications, if we think about the software stack, starting with applications at the top, the industry applications are going to respond to the transformational forces that are underway inside individual industries. So as I mentioned, retail is responding to the transformation of the way retail is executed in the consumer space. We also see shifts in the enterprise purchasing space driven by some consolidation. We look at a company like SAP purchasing Ariba. That has supply chain implications, but doesn't necessarily change the way those transactions are done. The next step down we see are the horizontal business applications. Addressing that space is more about taking the enterprise applications that used to be used by a few super users or analysts in the back office or the specialized user, and extracting that information into the mobile enterprise and putting it into the hands of the frontline employees. So it changes the way that business is being done, changes the delivery mechanism, and it also has a deep change on the infrastructure that supports it. So that's the next step down. When we look at cloud, big data in particular, the drive for mobile, the drive for BI and analytics, all of these are forcing change into what we call the software infrastructure layer, the layer that sits underneath the application and BI portions of the stack. It's not enough to just have these sitting on one-off servers. We need to have more flexibility, the ability to add bursting, improve the throughput on transactional systems. This is an area in particular where we see in-memory having a transformational effect in the years to come. We're going to see the beginning of this happening this year, but in the next 3 to 5 years is a very powerful wave of change that's going to run through this section of the stack in particular. And then wrapping around everything, we see the virtualization, the deployment, management, governance, and security elements of the stack, responding to this more dynamic environment where we have hybrid cloud, private cloud, clouds delivered as services from third parties, on-premise, mainframe delivered services, needing to be managed as an investment portfolio by the IT organization for the businesses. So there is a top-of-mind conversation that many of our vendors can have with their IT CIO colleagues and customers, where they can begin to shift the mindset. It's less around setting up and establishing even such a thing as a data center, but really thinking about that as an investment that's going to drive certain returns against risk for the lines of business. And we see that beginning to shift, but it's not all the way there yet.
Okay, we're almost at time. I think we have time for maybe one more question, possibly two. Who will be the leaders in the next quarter, 1Q13?
Well, if we certainly had that nailed down, we would have already written the report.
I know.
But we're starting to get some numbers coming out from earnings right now. We certainly see some of the firms that have challenges that are really going to respond very powerfully. We saw Oracle had some numbers that came out last quarter that weren't
uncharacteristic.
Uncharacteristic of their performance, and we believe that their field organization has been is redoubling their efforts, and that performance is based on kind of Oracle's very strong execution-driven culture is going to turn around there. But when we look at the leaders from the leaders and laggards portion of our portfolio, there are certain of the smaller firms that are tied into big transformational waves that are going to, again, continue to succeed. I mean, VMware's growth is going to slow down as the company continues to expand, but they're riding a huge wave of change in the data center. They're going to continue to be there. We see Microsoft beginning to ramp up the refresh of a great many of their products. The product refreshes have been released. Now that we're in the monetization cycle on that, we're looking for the enterprise portion of the Microsoft software business to begin to pick up speed as people start buying more and more of those refreshes and connecting them one to the other.
I think the big wild card for me on the leaderboard for the coming quarter, and not just the coming quarter, but the coming year, is the channel partner ecosystem, because as many of these vendors are making some very strategic and timely direct acquisition moves, direct changes in how they talk about their products, and VMware in particular comes to mind, I think they really need to be mindful of the impact on their channel ecosystems, because those are loyal partners, but they are not exclusively loyal. And I think the wrong move at the wrong time without adequate incentives that follow could have some very long-ranging impact on how these companies go to market for not just the next year, but the next 5 years.
We have about a minute left, so I have one maybe question that you guys can answer if you give me a 15-second answer, which I know is not easy for either of you.
Thank you.
So the question we're going to wrap up with was, what's your outlook for 2013?
Slow, steady, accelerating growth.
Yeah, I would agree with Elizabeth on that. I think that we're going to get back in the range of high single-digit, low double-digit growth in 2013 across net of all of the firms in our software benchmark. So it's an improving environment and one where we really want to see the stage set for stronger growth in 2014.
Great. Thanks, guys, and thanks for those of you who sent your questions across. As promised, here's all the social media links that you need, both to follow Elizabeth, Stuart, as well as TBR on Twitter, and the SlideShare and YouTube URLs to look at this presentation or any of the others. We really appreciate your time today. As you're leaving the presentation, there is a quick survey that we're fielding, 2 quick questions and an open-ended if you want to give us more feedback. We're using your comments to improve our webinars quarter to quarter, so anything that you do tell us would be greatly appreciated. I'm going to leave the the chat function open for another couple of minutes in case there's any last-minute follow-ups any of you have. Otherwise, we look forward to speaking with you guys all again. And just a reminder, there are other webinars that are coming out in the next several weeks. We have one on BI, we have one on cloud. Anything else, you guys?
Those are the near-term ones.
The near-term ones are BI and cloud. So if you don't have an invitation for that and you would like to attend, please reach out to any of us and we'll get you that information. Thanks again, everyone, for your time, and have a great afternoon.